What's up everyone, it's Scotty with Money Investing. So markets today, they were slightly green. However, we did see a lot of the gains kind of vibed out intraday. S&P 500 at one point during the day was actually down lower in the red, and the Nasdaq was also very flat. So we came down, we filled the entire gap, and then we pushed higher towards the last 30 minutes of the day. And that is exactly one of the things that, we discuss on the channel. It's not so much about where futures trade. I see a lot of focus and concentration on futures and how futures are doing, how the markets are gapping up or gapping down, when it's really about the intraday momentum, intraday price action, how's the sentiment intraday, because you can see markets go up and gap up and do really well for the first 5 hours and then dump in the last 6 hours to close red. Or it can be the other way around. The markets can really gap down, be brutal open here, and keep selling off in the first 5 hours, and then a lot of rally in the last hour for them to open or for them to close green. So there can be a lot of variations of this, but what really matters, at least to me personally, and what I encourage should matter to you, is not so much the futures and what markets are doing overnight, but instead how they're trading intraday. Because today we saw the Nasdaq at one point up over 2%, and then from about 11:10 a.m. it sold off a little bit over 2.3%. So this right here was the entire sell-off for the Nasdaq, dropping over 2.3%. The S&P 500 in a very similar situation dropped a little bit over 2.12%, and the Dow Jones is going to be over here, which from 11 a.m. dropped a little bit over 647 points, or down 2%. So that intraday weakness was actually pretty strong for the market. Nonetheless, the market still ended up closing green. The Nasdaq was still up 1%, so it did rally a little bit back higher. And so did the S&P, up over 30 basis points, and the Dow was flat. But again, this is nothing compared to the sell-off that we saw from yesterday. And from 12,000 points, we're still down 2%. And from the S&P 500 at 4,040, still down about 2.2%. And the Dow Jones still lower, a little bit over 600, 700 points from those levels. But nonetheless, jobless claims numbers came out. By the way, if you guys enjoy this video, find it helpful, make sure that you drop a like. I would really appreciate it. Subscribe if you're new to the channel. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. There is a 16% annual discount available for a limited time. And again, you can get access to all the alerts, all the other benefits, lectures, tutorials, buy and sell alerts, trade ideas, all that stuff is going to be included. We've got a little bit over 3,700 members. So link's going to be down below with limited spots left and a 16% annual discount that does expire at the end of this month. So jobless claims numbers came in at 191,000, so a slight decrease week over week, down about 1,000 from the prior week, and consensus was 195, so a little bit lower. Continues to suggest that the labor market's super tight. Unemployment is very strong in the US. This is the Fed's balance sheet. So once again, we're seeing a little bit of an acceleration in the Fed's balance sheet. It was supposed to come out today at 4:30 p.m. after the markets closed, and it did. And we are now back over $8.7 trillion. This is again increased by about $100 billion on a week over week basis. And more than I think 2/3 now all the quantitative tightening has been removed from the Fed, just with respect to its balance sheet expanding once again, and total assets now getting up to over $8.7 trillion. Now, I see a lot of comments about quantitative easing. I see a lot of comments about markets going back up to all-time highs. I see a lot of sentiment around the fact that markets are very much stabilized now, and they are going to go back to all-time highs, and we can just ignore all these possibilities of potential recession, more downside, all these things. I have a simple question for those people that actually believe QE is good. I really honestly genuinely want to know why they believe money supply, increasing the money printing and quantitative easing and rate cuts is actually good for the economy. I actually want to know that. I genuinely want to learn why quantitative easing and rate cuts and money printing is good for the economy, because I personally don't think it is. I don't think long term that's a solution to the problem. Every time we get into a problem with respect to recession, and there's a lot of inflation, every time we kind of go back to quantitative tightening, of course, and then every time we want to grow the economy, every time we want to actually see some earnings growing and economy growing, we resort to quantitative easing and money printing and you know, lots of QE. So I really want to know, you know, because I don't think that the Fed's balance sheet expanding now to $8.7 trillion, and again, as a percentage of GDP, getting up to over, you know, 25%, and, you know, the debt levels, I talked about that yesterday in my other video, where Senator John Kennedy absolutely ripped, you know, Treasury Secretary Janet Yellen apart and President Biden for their budget proposal, and the fact that the debt in the United States is going to increase from $33 trillion to over $51 trillion by 2033 in 10 years, and the deficit's going to continue to increase, and the budget proposals even higher at 6.9 trillion. That's half a trillion dollars more than what was previously suggested. But the bottom line is, you know, QE is not the solution to the problem in the short term. Yes, we're going to see some rallies, and yes, we're going to be able to celebrate some green, but it is not the long-term solution to problems. So I don't think that the markets need to be dependent on quantitative easing and money printing every single time we need to see a rally. Yellen says Treasury is ready to take additional actions if warranted to stabilize banks. You know, Janet Yellen's been all over the place. I mean, you know, from guaranteeing insurance to backpedaling to now saying that we're ready to take actions if warranted to stabilize banks. I'm not even going to listen. It's just all over the place. Block shares plunged 15% after short seller Hindenburg says Jack Dorsey's company facilitates fraud. So again, I talked about this in my other video. Make sure that you do check that out if you haven't already. We talked about Square and Block and what they actually released. I'll briefly go over that, and we'll go over that in more detail over the weekend. And this is a 3-year anniversary for the stock market pandemic low that we hit 3 years ago, and since then the markets are up. S&P has risen nearly 76% from its closing low reached on March 23rd, and the Dow is up 72%, and the Nasdaq is up over 70% as well. So this is how the indexes have performed in the last 3 years from its March 2020 low. And again, lots of momentum. At one point, of course, we were up over 100%, but since we have come off so much, we are still up though, but we're obviously down. These right here are going to be individual sectors and how they've performed since March. Energy is the big winner there, 233% gain. We got IT as the second best sector, over 102%. Materials up 98%, industrials up 98%, financials are up 77%, healthcare is up 68%, so on and so forth. We are seeing, of course, a lot of momentum, and of course, all of them are up from their March 2020 lows. This right here was another news piece. Americans will dump up to $1.1 trillion in stock this year and move the cash to credit and money market funds, says Goldman. However, on a net basis, we forecast that households will still be net sellers of $750 billion equities in 2023 and $500 billion of equities in 2024. So regardless of Americans dumping $1.1 trillion, I feel like they're going to take out $1.8 trillion and as a result be net sellers of $750 billion in equities in 2023. These are the rate cuts priced in from the Fed futures. And right now you can see that market is expecting a pause for the next couple of meetings for the Federal Reserve to do nothing, stay at 4.75 to 5%, and then start cutting rates in July. And these rate cuts are getting more and more crazy. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Now there's 9 rate cuts. If you take one rate cut as 25 basis points, there is 9 rate cuts priced in. This is absolutely maddening. I have no idea how the market can be pricing in this many rate cuts. And a terminal rate, like eventual rates of 2.5%, 2.5 to 2.75%. This is just beyond me. This is so funny. But no, the market is pricing that in. That's 9 rate cuts is what we're expecting. And that's, you know, over the course of next, say 12 months, 12 to 14 months. And, you know, a lot can change, you know, all jokes aside, a lot can change in the next 12, 14 months. Inflation can come down. There can be a soft landing, and the Federal Reserve can actually believe there's time to rate cut rates, and we can actually start cutting rates. But this is very optimistic. This is extremely optimistic because what Jerome Powell and the Federal Reserve have told us is this. Let me just go ahead and see if I can draw it. So they have pretty much told us that right now we're going to get up to, all right, oh, it's white. There we go. So right now they've told us that they're going to get up to this 500, what is going on? All right, now it should work. Anyway, so what they've told us is that they are going to get to 5 and 5.25%, and they're going to assess situations. They're going to stay at these levels at least until 2023, at the end of 2023. Then they have told us that they're going to drop rates down to 4.6, 4.3%. So they're going to drop them down to this level right here. So this is the discrepancy as what the market's pricing in versus what the Fed has told us. They have told us they're going to be here, 5 to 5.25%. They're going to hold the rates here for the remainder of 23 after one more hike. And then they're going to cut them down to 4.3, 4.6% around those levels. So this is going to be the level to really be expecting for us to come down to. And the market is all the way over here, 2.5 to 2.75%. So again, we'll see eventually how this discrepancy plays out. And once again, you're seeing a little bit of rotation out of energy and financials and healthcare over to big tech. So Microsoft up, Google pushing higher, Meta, Amazon, Tesla was slightly up, Nvidia, AMD continue to charge higher. Just be careful with those stocks. I'm starting to unload some of AMD here at these prices. We got Adobe, Apple and Accenture, all of these companies pushing higher here on the day. So lots of volatility and momentum towards the top left of the screen. So comm services, technology, the big leaders, the big winners on the day. And in the last 1 week, those are once again the two sectors that are pushing higher. In the last 1 month, those are the only two sectors that have done really well, as they are now being seen as the safe haven in the market. Orange juice for the win, so pushing higher on the days, so doing really well. We got Bitcoin here back over 28,000 and Ethereum back over 1,800 as well. So volatility here was pretty flat. We were at just over 22, so up a little bit over 1.66%. And just kind of stabilizing at those prices at the moment. Crude oil is once again getting a bit of a rejection here at $69, $70 a barrel. So this right here was, the level that we talked about for crude oil. And right now we're just consolidating sideways. And really that support's going to be 65, close to $66 per barrel. And we got Bitcoin here just consolidating sideways as well. Just had a very strong rally. Of course, it was up a little bit over 3.7%. But right now just trading at 28,000. And that's going to be the level to pay attention to. And Ethereum, we've got 1,800 at the moment. And support level is going to stay about at 1,735. So we're getting a bit of a validation for Ethereum at those prices at the moment. Now, going over to S&P 500 first, SPX, we're seeing, again, a little bit of consolidation here. Yesterday was a brutal red day. Today, red candle on a green day. So, again, lots of consolidation. So, not really, a lot of decision was not made on the market. I mean, in fact, we were trading as high as 4,004, trading as low as 39.15. So, there was like a 100-point variation, 100-point move in the market intraday. And right now, we're just kind of trading sideways. And support level really is going to be 37.74 for S&P 500 moving forward. Talking about the NASDAQ, up a little bit over 1%, so 11,787. Next resistance is going to be 12,280, something that we have talked about on the channel before. And again, we're going to keep a close eye at that resistance and a support in line with this previous lower high and that resistance. So this right here is going to be that level to watch for the NASDAQ. Talking about Apple, and Apple here is still green, managed to close higher above $158, $157. So this right here is still going to be that support level to watch for Apple, and continues to push up. RSI MACD not quite overbought, but there is a bit of a divergence forming because the RSI definitely making some lower highs here, and the price itself continues to make a little bit of a higher high. So there is some level of divergence, so keep a close eye on that. Amazon here, on the other hand, was up, flat. Didn't really move much, up just over 1 basis point, just trading a little bit under $99. And this is a lot of consolidation for Amazon. So what we're really doing is just trading sideways for Amazon at the moment, and lower highs are going to stay put right over here. So that's going to be that level to pay attention to for Amazon. Talking a little bit about Tesla, and Tesla on the day also very flat, still getting rejected at this resistance. This is something that we have talked about on the channel before. So $199, close to $200 is going to be that resistance, and support level is going to stay put at 175 to as low as 166 for Tesla. We do have a pretty significant resistance for Tesla, sitting roughly at 210 to as much as 228. So those right there are going to be some levels to watch also. But support level is going to be in line with the supports here, 166 to 175, and resistance is going to stay put at $200 per share for Tesla. Talking a little bit about Nvidia and AMD, they just continue to push higher. Nvidia was up another 2.7%, so I could actually see it get up to $292. I think that's a level that it could easily get up to. That's a target that I have for Nvidia at the moment. And yeah, that's going to be the resistance. Be careful. RSI extremely overbought. So is the price itself, and of course the valuation. We don't even want to go there, how high the valuation is. For AMD, it's getting up to that resistance as well. This right here is going to be that level. So $102, $103 is that resistance for advanced micro devices. Definitely overbought, so be careful. I'm starting to kind of unload a little bit of shares for advanced micro devices at these prices. Talking a little bit about, what is it, PayPal. And PayPal here on the day was down 2.3%. So that report came out, did affect PayPal a little bit. By the way, I want to quickly give a shout out to Vertex. It continues to move higher, and it's now up to $304, $305, up another 2.3%. So very much moving into our profit zone even further. My target stays put at $323. Again, if you want to get trade ideas like these, we only offer asymmetric trade ideas where the risk is going to be little, but the reward potential is going to be much higher. So Vertex has already moved up a little bit over 7% in the last few days. So very nice move to the upside. Target's going to stay put at 323. But link's going to be down below if you're interested in joining us. PayPal here, again, getting a little bit of that effect of a short seller report from Hindenburg. Support level is going to stay put at $67. So this right here is going to be that level. And of course, my fair value stays put at $70. Square, green candle on a red day, still down close to 15%, almost, lots of indecision and consolidation intraday, trading as low as 56, trading as high as 66. So $10 swing on the day. Support level is going to stay put at 59, all the way down to as low as $51 per share for Square at the moment. So those right there are going to be some levels to watch for this company. Talking about Meta platforms, and Meta on the day was up 2.2%, getting up to $207 per share. Next resistance really is going to be 222. So this right here is going to be that next level to watch for Meta. And we also had TikTok CEO kind of address the U.S. Congress, I think it was, or might have been the Senate. I have to go back and double check. But there was a hearing, there was a testimony where they kind of went over a lot of privacy issues, a lot of data issues, and of course the fact that it's owned by ByteDance, which is controlled over, in China. So, but Meta here is still pushing higher. Maybe I'll see if I can do a video separately going over that topic of discussion. Next up, we've got Netflix, and Netflix here on the day up 9%, a very, very strong move to the upside, back over $320. RSI and MACD pushing right back up. It was, starting to become a little bit on the oversold side. And again, starting to trade back above inside its uptrending channel. Next target and resistance is going to stay put at 352 to as high as $380 for Netflix moving forward. Talking about Google here, and Google on the day was also up almost 2%, starting to break to the upside a little bit over $106. Next resistance and target is going to stay put at 109. Very, very important level to watch for Google over here. So that's the level we're going to be watching very closely. And finally, we got Microsoft and Shopify. Microsoft still up 2%, but lots of indecision and consolidation. So that candle was a doji candle that represents a lot of uncertainty for the price action itself. But we got a resistance and a target similar to Nvidia at $292 for this stock. And finally, we got Shopify. And Shopify here was up over 1.85%, so pushing higher a little bit, back over $45. This is a huge gap that, obviously needs to fill. So it's getting up there slowly and steadily, and all the way up to $54, $55 is going to be that next resistance level to watch for Shopify. So hope you guys enjoy this video. Bottom line is that in the short term, there could be some rallies in store. There could be some upside, but longer term, if the QE continues, if the market is right about all these rate cuts that the Fed is going to do, along with all the money printing, with the balance sheet expanding, eventually the chickens are going to come home to roost, and it's not going to look good, in my opinion. Again, it's possible that inflation comes down dramatically and everything works out well. There's a soft landing, there's no recession, inflation comes back down to 2% and rates start getting cut, and that's going to be a happy ending, right? That's going to be like us kind of driving into the sunset. But when reality hits, I personally don't believe that is going to be the story, but we'll find out soon enough. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel, link to our Discord, Patreons down below, 16% annual discount until the end of this month. As always, happy investing. I'll see you all in the next video.